What's up, everyone? It's Eric with Option Edge, and today I want to talk about an option strategy that can actually make you more money if you guess wrong. Let's get into it. I'll show you how. All right, folks, so what am I talking about when I mean that you can put on a trade and be wrong and still make money? Well, what I want to talk about is butterfly spreads and broken wing butterfly spreads. Okay, I'm not going to go into everything, but I'm just going to give an example today. So just real quick, this is what a regular put butterfly spread is. You're going to buy this for a debit where you sell two puts and then you buy two equidistant puts outside of those middle puts. Okay, so imagine this is 50, this would be 55, and then this would be 45. So it's the difference is 5 strikes wide. Okay, so that was broken wing puts. These are broken wing calls. Okay, so this actually gives us a good example. I'm looking at Tasty Trade's website where we have the 105 calls. We're selling 2 calls. And then to the left, we're buying a call, and to the right, we are also buying a call. And you'll notice this is 15 strikes difference, okay? Because 120 minus 105 is 15, and then this is 5 strikes of a difference. 105 minus 100 is 5. And if you notice, as long as the stock price stays below here, you're going to profit. Okay, and basically how you calculate your break-even point would be you take the strike that you're selling, which is 105, and you're going to add the credit you receive, and that's going to be your break-even. You're going to add the credit you receive to the strike, to those middle strikes, and that should be your break-even. So let's say you received a credit of 1. Your break-even point is going to be 106 because 105 plus 1 is 106. And today's example is going to be a broken wing call butterfly. Okay, so just to show you guys where this trade's coming from, I have subscribed to a free newsletter called Alpha Boost. It's also sort of ran by the Tasty Trade people. So basically, quick recap synopsis about what Alpha Boost is. It is AI software that analyzes different trades and basically looks at stocks, ticker symbols that have high volatility, and basically sell premium in those ticker symbols. So today we're looking at the retail ETF XRT. The current macro situation is the American consumer is pretty beaten down, and I have a bearish basis in retail ETFs. I mean, that might seem a little bit too obvious, and sometimes the non-obvious thing is what happens. But I'm bearish in XRT, so I think it's going to go down. But at the same time, this stock actually has gone down so much so that I'm worried about a little upside pop because it's been beaten down, and I think that could happen. So this is just showing you different trades you could do depending on your directional bias. So iron condor is obviously a neutral play, strangle neutral, and then here's some neutral to bullish. I'm not bullish at all. Not bullish. Okay, so here's a bearish trade. I don't want to do a short call. That's going to eat up a decent amount of buying power reduction. So what I do want to do is one of these broken wing call butterfly spreads. Okay, and like I said before, the reason why I like it is even if this thing moves up against me, I'll still make more money. Okay, so I want to show how to construct this XRT broken wing call butterfly spread, and I'm going to select different strikes that Alpha Boost suggested about $1 higher because the stock at the time was trading at $62.50. It's now over $1 down, so I moved the strikes down 1 or 2. So we're going to start with our 64 strikes. Okay, we're going to buy 1 strike below the 63 calls, and then we're going to buy 3 strikes above, which is going to give us a bearish bias. Notice this isn't We're not done yet. We have to set a custom ratio here. Okay, so we're not done setting up this trade. We have to start messing around with how many of each strike we want to sell. So remember, we want to select custom. We don't want the normal 1-to-1 ratio. We want a custom ratio. We're going to do we're going to sell that middle strike, the 64, excuse me, and we're going to sell 2 of them. And now you can see that we've got our broken wing butterfly graphic. And this total credit here is actually incorrect. The total credit is 52, as you can see here, because that's going to be our max profit if we fall below that 64 strike is going to be the credit received. If we pin the strike, we stand to make 3 times the amount of money than the credit received. And if you notice, we break even 1 strike above plus the credit we receive, so $65.52 is what our break-even point is going to be. And what I love about this, and like I stated before, I have a bearish bias, so as long as we move to the downside or we don't move at all, the option strategy is going to make me money. And even if this option strategy moves against me, which it's currently trading at $61.29. It's going to need a significant move to get back up. It's going to need about a 4% move over the course of 30 days. That is obviously possible, but it's a sizable move. So the other thing is the current IV rank is 58, so that's very high. It's elevated volatility rank. So we hopefully volatility will contract down, and when we're short vol. And there's a volatility, decrease in volatility, we stand to make more money as long as the directionality of the stock doesn't go too crazy. Okay, so it's sort of a double whammy. We can be wrong if the stock moves against us, and then we'll still make money. If the stock moves where we think it's going to move, which is to the downside, we make money. And if volatility, which is raise, decreases, which when volatility is high, it tends to decrease. It is mean reverting. Then we can make money on that vol crush. So it's sort of a triple whammy play we got going, and high probability and limited risk. So you can see our probability of profit is 75%, and we stand our max win could be that much. It's a little bit slightly different than what Robin was saying. So that's really it. I hope you guys enjoyed that trade walkthrough and example, and please tune for more. Okay, take care. Bye.